Hello, good afternoon. You're tuned into Closing Trades 180 now. I'm Anisha Jain. With me is Aisha Faridi. And the news is that the positive momentum really continues in the market at this point of time. Nifty above the mark of 18,400 and comfortably so throughout the trading session. Bank Nifty teased us, reached a level of 44,150.70, which is 10 paise below the live high level of 44,151.80. So just kissed that mark and then made a U-turn. And now it's almost 120 points away from the live high levels, but still at least above the 44,000 mark for the Bank Nifty. Having said that, today there's a very broad-based recovery, which is at play. The Nifty Auto Index is sitting at all-time highs. FMCG Index is at all-time highs. You also look at the real estate sector, which has gained as much as 4.5% intraday itself. Sobha Realty, for instance, is up around 14% as we speak. DLF higher by 8%. You also have other names like Mahindra Lifespace, Oberoi Realty. They're all up anywhere between 5 to 10% in the trading session today. And even broader market, Aisha, quite lively. The advanced decline ratio and the names which are reacting to earnings are also quite a few.
Oh yeah, absolutely. Started off with Tata Motors and then of course DLF. Look at the intraday graph on DLF. We're sitting at the highest point in the day. It's almost an 8% surge that DLF futures are seeing. But look what it's doing to the rest of the realty pack. You've got an Oberoi Realty holding up 5.5% in trade. Godrej Properties up about almost 5%. So clearly the gains are pretty lively within the realty pack. There's Colgate as well. Again, an earnings reaction, 4% higher there too. And then Hero Motocorp too, which is looking very, very smart indeed. Of course, there are the list of pressure points as well. Cipla, Naveen Fluorine, Apollo Tyres, even Adani Enterprises. While we are awaiting the Supreme Court observations on the Hindenburg-Adani case, that stock is lower by about 2.25% as we speak right now. But let's take it across to our chartists and find out how the trading day is looking like. While it is looking excellent, Kunal, I think the bigger question is whether the Nifty Bank can help the Nifty bridge that 400-point gap from the all-time peak.
Well, yeah, I think in part by part. So we've seen FMCG stocks making a new high, FMCG index making a new high, auto index making a new high, banks. Hopefully, I think we can confirm that new high about 44,152 mark on the spot levels. And so I think these sectors one by one, when they eventually make a new high for themselves, it's a matter of time that the index also follows suit. And this comes at a time when there's so much of extreme negativity amongst the second most highest weighted sector, which is the Nifty IT index, which is nowhere close to its even 6-month high. Forget about the life highs for the IT index. So I think this comes as at a very good time that the market is getting more skewed and more bent towards the high beta, the rate sensitives so far. Matter of time, as I said, that the index makes a new high, but the momentum, the strength in which the market internals have showed quite exceedingly strong. The one biggest highlight, which I believe is the change for Bank Nifty, which had not been the case in 2021 and 22, is the mix of banking stocks and so many large cap private sector banking names other than ICICI Bank and SBI, which are actually making a new high for themselves. So I think that's the standout feature for the markets.
Well, yes, the participation has definitely improved. The texture of the Bank Nifty reaching that all-time high level has also changed quite materially. But let's try and understand what's happening with respect to some of the earnings. We have Rainbow Hospitals that delivered a good set of numbers. In fact, in the quarter gone by, we saw a revenue growth of 49%, margins improved to 30.9% versus 22.7%. But are these numbers sustainable? Let's try and understand with the management who's joining us on the show. Just wanted to begin with by trying and understanding what's happening to the outlook with respect to the revenue growth going forward, because in FY23 as a whole, Dr. Ramesh, we have seen that there was a revenue growth of around 21%. Going forward in FY24, could you better that number?
No, I think what we have done is we are listed about a year ago, and now first year we have guided about revenue of 20% growth. We have done more than that, and EBITDA growth was 20%, 25%. Pre-Ind-AS, which actually we have achieved that. So moving forward, what I see is that that I think the top line is not a major concern because we always expect high teens to grow, and what's going to happen is that we are adding significant number of beds this financial year. Almost about 400 beds are going to come in into the network. So obviously, top line may not be a problem. But we'll definitely see some degree of margin pressure. But this is how we see our business moving forward.
So in lieu of that, what is the visibility you have in terms of where the business could be scaled up to, say, at the close of the financial year? And what then do you do with your proposed expansion? Because as we understand, you were looking at, amping up capacity, additional 160 beds in Rajamundry, 270 beds in Hyderabad. Does that stand as if, as you had indicated earlier?
Yeah. So how we look at it is that how many of the beds which have been added in the last 1 year time, which is going to kind of take time to mature. So obviously the matured beds are going to be 50%, and the kind of maturing beds are going to be 50%. The segments equally positioned. So the top lines will grow definitely. There's no problem with that. When you grow, have a significant number of beds being added. For example, the current year, we're going to add about 230 beds, 270 beds in the current year. So that's going to come in the second quarter of this year. So overall, your kind of the revenue growth will be about 18-19% is expected to grow, and we'll have to see how the margins are going to be based on the mature businesses, how it's going to grow, how it's going to grow, and also the new units, how it's going to pan out.
Ramesh, that's exactly my question. Your margins have already come down to 30% versus 35%, which was the earlier run rate. And you're hinting that it could go lower. So are you expecting it to go below the mark of 30% once those capacities, etc., come on board as well?
I think our business, we need to look at in year-on-year business. I think it's only 1 year since we have listed. I think we have posted whatever we have guided, which is we have always guided about 25% pre-end days, and post is about 30%. So we have kind of overachieved in the last 1 year. What if you precisely look at it? So moving forward, I think whatever we have kind of guided first 3 years, the numbers are going to be, that will be well within the range to achieve it.
18 to 19% revenue growth is what you're envisaging in FY24. There could be some pressure when it comes to the margins, and the capacity expansion continues to be on board. Talk to us about the other internals as well in terms of the occupancy level, the ARPOB levels. What is it expected to trend when it comes to FY24?
I think the occupancy levels will do when the mature set of hospitals will still remain about 65-66%, and the newer ones which are kind of consolidated probably about 40+ percentage of occupancy. This is a blended will be about, again, if we achieve about 54-55%, it will be a very good set of occupancy.
You talked about your expansion plans in terms of the organic capacity addition, but what about the inorganic route? Are you looking at some sort of acquisitions as well? Because there's been recently a lot of news flow around consolidation and mergers and acquisition in the healthcare space.
Unfortunately, we haven't got many to acquire in the pediatric space. And if there are any, which comes kind of philosophically aligned, we are open to do it. But I don't see really in the very near future of acquisitions. The inorganic, what we are trying to do is that, the brownfield projects are ones which can come up very quickly into the action. So about 12 months time, 15 months time, we can build up. That's what we are trying to do. But basically, business plan is to see that we are very strong in Hyderabad, Bangalore, we're building up story. Chennai, again, kind of we've got a good credibility. We're adding a lot of beds in Hyderabad, Bangalore, and Chennai. So most of the beds are going to come in FY24 is going to be in these geographies. So the new greenfield projects are going to come in Gurgaon, which is going to be sometime in 3.5 years down the line.
Okay, Dr. Ramesh, we'll let you go on that note. Appreciate you joining us on 18 Hour today. Moving forward then, Shibani Sarkar Kurian, the Senior Executive Vice President, Fund Manager and Head Equity Research, Kotak Mahindra Asset Management Company, joins us on the show. Shibani, hi. Good to have you on the show as always. Well, the Bank Nifty just around at all-time high levels. Do you expect the financial sector to continue to lead the way going forward as well?
Hi, good afternoon. Pleasure to be here. So yes, our belief is that the banking as a sector appears to be fairly well poised. So when what has happened over the last year or so is that credit growth has improved. It's become fairly broad based. While the focus now has shifted away from asset quality and even to some extent credit growth towards deposit growth and liability franchise, what we've seen is that for the sector as a whole, there has been a sharp improvement in terms of return ratios on the back of better growth, better margins, and superior asset quality performance. And the same has not been reflected in terms of the valuation re-rating. So if you look at valuations for banks, for instance, over the last 10-15 year period, current valuations are just at about long-term average levels. And therefore, the improvement in the ROE profile of banks is not reflecting in terms of valuations. And therefore, we do believe that there is some room left in terms of valuation catch-up. Now, within the banking space, of course, the construct has changed somewhat. As I was mentioning earlier, focus has shifted just from credit growth and asset quality towards banks which have a superior liability franchise, because now deposit growth and cost of deposits are what is important and will drive profitability going forward as well. So therefore, banks which have a larger share of CASA, which is low cost deposits, larger share of retail deposits in their overall deposit franchise, and banks which also have a loan book which is more floating in nature, linked to MCLR, will be able to manage the margin trajectory going forward better. So in this construct, we are positive on the larger private banks and some of the larger public sector banks in our portfolios. But overall, we believe that the sector does have some headroom where valuations are concerned.
Story today surely seems to be, real estate. DLF has reported a very strong record bookings of about 8,500 crore rupees in the fourth quarter, which is almost up 3 times on a year-on-year basis. The pre-sales have come in at 15,100 crore rupees versus the initial guidance of 8,000, so almost doubling that. The FY24 guidance as well is extremely robust. They've launched a trajectory of about 11 million square foot in FY24, worth about 19,700 crore rupees. DLF, of course, has been on a tear today, as has rubbed off on the rest of the realty pack as well. So Oberoi, Godrej Properties, all of them looking very strong indeed. But Kunal, you wouldn't go fresh long on any of these names, would you?
I would definitely go long on many of these names. So DLF, Anantraj Industries, Godrej Properties, Oberoi Realty, I think these are very strong breakouts even for DLF. So this is the first time the stock has actually shown this kind of a gap move, as well as this strong volumes post the results. And this generally is an indication that the new trend has begun for the stock. So now we could be looking at 400 and 450 as actually a major support as well as a base for the stock. And gradually it should move up to that 500, 550 plus mark. So possibly in the next 1 or 2 weeks, I would expect DLF to go back to that 500 level. The stock has come out of a 10-year of consolidation. So which means that what we are seeing today is just a starting move for possibly a multi-year uptrend for DLF.
Yeah, and our research team tells us that it's a 13-year high on DLF that it's hit today. So what's leading to all this excitement? Let's take it across to Vamakshi and find out what the management commentary was like at the Q4 numbers. Vamakshi?
Well, a good set of numbers that came in for DLF, and the company in fact recorded record bookings of almost 8,500 crores in the fourth quarter itself, up nearly 3 times on a year-on-year basis, and this was on the back of nearly 8,000 crores of booking coming in from one project, that is the Arbor project. As a result, FY23 pre-sales came in at around 15,100 crores, which was much above what the initial guidance was. Apart from that, the management also came out with a very strong commentary as well as guidance for FY24. They have a robust launch pipeline of almost 11 million square feet worth almost 19,700 crores. They also have given a pre-sales guidance of around 11 to 12,000 crores, which in CLSA's opinion appears to be quite conservative. CLSA has in fact maintained a buy rating on this stock and in fact hiked its target price from 458 to around 540 per share. But not just DLF. Today we have a whole host of realty stocks in focus. In fact, on a year-to-date basis, when we look at the Nifty and as well as Nifty Realty's performance, Nifty Realty has outperformed Nifty. Now, this comes as no surprise given that it has been a record year for all companies across the board. When you look at DLF, Godrej Properties, Macrotech, Shobha, all these counters are posting more than 30% plus growth as far as pre-sales are concerned. Now, going ahead, there are several triggers in place for real estate counters. Supply additions are lagging demand growth, which in turn is aiding the property prices. There is also a visible shift towards organized as well as branded developers from the unorganized players. Now, that was it for the triggers, but what do our analysts actually expecting from realty stocks going ahead? Well, as per a Bloomberg consensus rating, on an average, analysts are expecting a nearly 18% upside potential from the current levels of most realty stocks. And in fact, the highest return, as you can see, is expected from Shobha, 47% up. DLF, Godrej Properties, Oberoi, on the other hand, are also expected to post nearly mid to high single-digit upside from the current levels.
Okay, and it seems like the street is listening to what you are saying. The return potential is maximum in Sobha Industries, and that's the reason that stock is seeing the highest amount of momentum today as well. The stock is up around 14%, followed by the rest of the pack as we just highlighted. Shibani, your take as far as the entire real estate pack is concerned, would you look at niche markets, let's say the NCR region or the Mumbai region, or are you looking at it from the point of view of which is the luxury play versus the affordable play? What's the thesis on real estate?
Yeah, so real estate has been a sector where we've been positive on. A few things that have been driving demand for real estate overall. One is, of course, this sector has seen significant policy changes, which has resulted in consolidation and market share shifts towards the organized larger players. And therefore, that is something that is clearly visible today. So the move from the unorganized to the organized large players, which is playing out. Secondly, with affordability going up over the last few years, we've seen that demand has come back, and demand has come back especially in the luxury segment as well as also in some of the premium segment where you're starting to see growth coming back in a big way. And with absorption of excess inventory and the demand supply dynamics improving, we've started seeing some of the builders in some of the pockets taking some small price hikes, which also bodes well for the sector as a whole. So currently we believe that, of course, we have to be mindful of valuations, but the sector does appear to be well placed in terms of the overall demand supply dynamics, which is favoring the larger organized builders and the developers in this category. The other way to look at real estate is to look at the home building segment. Now, this is a segment which has been impacted in the last year or so because of higher input costs, and margins have been under pressure. But as the overall real estate space starts to improve, some of that improvement should start to flow through in terms of home building as a sector as well. And with input costs abating, margins should also start to improve. And therefore, if you look at both real estate and home building as a space, this is a segment which we continue to like and are positive.
Wanted your sense in on what is it that you're liking from not the realty pack, but the entire home building space, paint, sanitary ware, the allied spaces that support realty.
Look at the allied spaces, the segments that we like are, say, tiles, cement, ceramics. So these are some of the allied segments within home building where pipes, for instance, where we continue to be positive.
Okay, so that's the take coming in. Nuresh, wanted your take on the entire real estate and the allied sectors. Nuresh, any top picks?
So stocks have been breaking out today. Some of them have already made a sharp move, but Prestige is one which has given a fresh breakout. That looks promising. Second is Kolte Patil, which is where a lot of volumes happened over the last 1 week or so. There was a big block deal. So these are the two names which look good. DLF is the most interesting one, but it has already moved up quite a bit. But dips to 450, 460, DLF would be the next one. So these are the three names which look interesting, and the whole space has given a big breakout.
Okay, so that's the take coming in on this entire space. But with that, slipping into a very short break with the news, the Nifty is comfortably above the 18,400 mark, but a bit of a let up when it comes to the Bank Nifty.
113 points higher for the Nifty futures right now, 0.6% gain, closing in on that 18,450 print. Still 400 odd points away from that all-time high on the Nifty, while we're almost there for the Nifty Bank. And it's quite intriguing because if you look at the Nifty Bank constituents, barring AU Small Finance Bank, not any and every of the large cap banking names, especially those with the higher or maximum most weightage within the Nifty Bank, are doing well today. Look at ICICI Bank, that's lying absolutely flat. Let's bring up that intraday graph, not of the Nifty Bank, but of ICICI Bank. It's picked up a little bit, but on the futures at least it's a flat print. Kotak Bank as well, not doing a whole lot there. So point being that it's not that all is well within Nifty Bank today as we close in to that all-time peak. Let's also check in on what else has been holding out well, with besides, of course, realty and some of the individual banking names. Metals has made a strong comeback today, much unlike what was the case last week, when even Novelis's good performance didn't rub off on Hindalco and you did see a meltdown of sorts within the metals pack. Today, most of these stocks are rebounding. Sustainable, you think, Naresh, the trend on metals?
So in metals, I'll be a little cautious because we've not seen a strong momentum across the board. The only spaces which should look interesting has been Jindal Steel and JSW Steel because they have relative strength, but they're yet not been able to break out in a big way. So I would be waiting out because there are much more better breakouts seen in the rest of the markets. So for now, metals is something which I would avoid, given that there is no risk reward or a momentum here.
Take as far as some of the metal pack is concerned as well. Separately, what's buzzing today is the FMCG space as well. You also have Paytm, which is higher by 4%, and a lot of other names as well. But Shibani, your take as far as the FMCG pack is concerned, because there wasn't any clear commentary this time around as to how rural is doing. What's been your reading of the earnings season so far?
Yeah, so FMCG is an interesting sector and a segment. So while there is no definitive sharp improvement on the rural demand side, but when you look at some of the incremental data points, what data shows is that rural demand has possibly bottomed out, and at the margin there are some nascent signs of improvement where rural growth is concerned. Now, commentary also seems to suggest that rural demand possibly has bottomed out, and that should, over a period of time, lead to some degree of improvement where volume growth is concerned in staples. So we are tracking the rural data points very, very closely. Of course, the joker in the pack can be monsoons, and of course, that would have a large bearing in terms of rural demand. But apart from agri, the other segments such as infrastructure activity, etc., which drives rural wages, along with the fact that you started seeing inflation coming off, which means lower input costs, means that real wages are now seeing some improvement, and that again bodes well for FMCG as a sector. The second aspect is margins. Across the board, we have started seeing improvement in terms of margins because of deceleration in commodity inflation. And that should also help in terms of boosting the earnings profile for the sector as a whole. So for us, we believe that FMCG is fairly well poised at this point in time. Valuations on a long-term historic average levels appear to be attractive. And if rural demand does come back, then this is a sector to clearly watch out for.
Okay, meantime, what we're picking up from news wires is that the Supreme Court has actually adjourned the hearing, or rather the order on SEBI's plea seeking more time for Adani probe. That is what we are picking up right now. We'll, of course, be getting more details. We've got a reporter right outside the Supreme Court in New Delhi. We should try and connect with Sumit immediately and get in more details. The Supreme Court, so far as we understand, has adjourned the order on SEBI's plea seeking more time. Remember, SEBI had asked for an extension of about 6 months. And on Friday, when you did have Supreme Court hear out the observations from both parties, they said that 3 months is enough time for SEBI to represent its case. But right now, it seems that they've adjourned their order in this particular case. Very quickly, we'll move away from this topic and get our colleague Sumit Chaturvedi back on the line as soon as possible. But let's shift focus and talk about what's happening within the mutual fund space, where cash holdings have hit a 2-month high. What are the sectors which are logging inflows, the ones that witness outflows? Sharad is here to put all that into perspective.
Well, yes, in focus we are having the top 20 mutual fund houses and their average cash level holdings, and you see the cash component has actually gone up by 60 basis points to almost 5.6%. Now do remember, this is coming at 2-month high levels. That means the cash reserves are actually being conserved because Nifty has also risen by almost 4% in the month of April. Now this is the most in the 5 months. Now let us look at how the flows have come. Strong inflows coming from the FPI segment. If you look at it, For DI segment, it's almost 2,217 crores of inflows in the month of April. But the FPI, that's the number which you're looking at, 11,631 crores of inflows have come in the FPI segment. Now, looking at the trend of the average cash holdings in the mutual fund houses over here, we see that's largely been in the range between 5.3 to 5.5% over the last 12 months. But we see for the month of February, it went up as high as 5.9% at a multi-year high, and then coming down to 5% in the month of March, and then again rising in the month of April at almost 5.6%. Now, apart from this, which segments saw the inflows coming in? Over here, we see financials, industrials, auto ancillaries, and staples seeing a majority of inflows coming in, while for the outflows, it was the names for the second straight month. It is IT, telecom, utilities, and also the consumer discretionary space.
The interesting bit, the cash levels have still remained a bit high, 5.6%, but at least not that 5.8, 5.9% levels that we had seen earlier. But coming back to the story which we were talking about, the latest update coming in from the Supreme Court on the Adani Hindenburg matter. Let's go across to my colleague Sumit, who is joining us with the latest.
So latest on the case is that today Supreme Court has adjourned the matter linked to hearing in the SEBI and Adani case. While it's clearly, currently it's clearly not very clear that why it has been adjourned, but yes, it has been adjourned. That's the latest coming on this. There are many developments since morning on the issue. SEBI, in fact, today on morning filed a rejoinder and saying that overall allegations that it has been probing Adani companies since 2016 are incorrect and baseless. It also said that it has probed over 51 GDRs of companies and there was no company from Adani Group in the overall investigation, and that's what the development happened since morning today on the whole SEBI and Adani case. Remember, in January this year when the Adani shares tanked, Supreme Court had put a committee, in fact had formed a committee to look into the issues and also to look into the betterment of shareholders, also giving SEBI 2 months to complete the matter. On Friday, which is last week, the bench headed by CJI Chandrachud, it said that extension of 3 months can be given to SEBI but not 6 months. And today we were expecting something on that could come. SEBI had applied for 6 months extension. Today also it made a case applying for more extension, but now we are hearing that the matter has been adjourned. A lot of other things may be in front of the court to hear before the matter is taken up once again. So SEBI today morning filed a rejoinder saying that allegations it has been investigating Adani Group since 2016 is baseless. It has also cautioned against premature and wrong conclusions in this case. So it came in the morning today. After that, the latest development is that the case has been adjourned now.
Has there been any next date been given for the hearing?
We are looking at that, Aisha, currently, and it looks like it may be some other date, but we are just trying to get some more details on the case of what else has been said as far as this case is concerned. We were just waiting to hear the arguments from both sides or the judges to start arguing, but we got to know that the whole case has been now adjourned, and what's latest on this, we'll be keep on updating you as soon as it happens.
Okay, we'll leave it at that, Sumit. In fact, we should bring up some of the Adani Group stocks because remember the entire group has been focused, a lot of news flow coming in. While of course we were hoping that the Supreme Court would pass this final hearing today and it would be a 3-month extension as was anticipated. But also the Adani Group companies are looking at a mammoth fundraising or at least an enabling resolution which has been passed over the weekend, 21,000 crore rupees in total, wherein the board has approved fundraising via QIP or other modes. For Adani Enterprises, it's an enabling resolution for 12,500 crore rupees, for transmission, 8,500 crore rupees, and for Adani Green Energy, the board is going to be meeting now on May 24th for fundraising. Also, Adani Total Gas, Adani Transmission, Adani Green Energy, they're moving out of the ASM framework from today. So, a whole lot of these group stocks under focus. Most of them are down in trade as we speak right now. Naresh, you wouldn't execute any trade on any of the Adani Group names, would you?
Not really, not the the section of stocks to look at. They've gone through that 30 to 50% correction and now should spend a lot of time bottoming out. You don't want to get in early, and overall the volatility is too high for the names in this section of stocks. So still an avoid from my side.
Okay, let's continue the discussion with the technical experts. Kunal, your take as to what the closing trade that you're spotting at this point of time?
Well, that will be on ICICI Bank. So as a closing trade, that's a stock which looks extremely attractive, heading towards a breakout. And it's been a stock which has not performed, at par with the overall move for the banking index. But I believe, that the momentum seems to be likely coming back for ICICI Bank. So that's a stock which I would look to buy.
Okay, momentum likely to come back for ICICI Bank, but where are you seeing momentum, Naresh, at this point of time?
So that would be on Yale India. The stock has come very close to the new all-time highs on a dividend-adjusted basis. The recent highs was around 111 to 112. We are knocking at that distance. Short-term flag breakout is done here. So this could see a follow-up move over the next few sessions.
Okay, thank you, Naresh, for those picks. But with that, we're slipping into a very short break. And Shubhani, we'll let you go as well. Thank you so much for making time and speaking with us today. Okay, time now to slip into a very short break. Nifty now threatening to go below the mark of 18,400. We'll track the last 30 minutes of the trading session when we come back. Closing trades on ET now, holding on to 18,400 for now. But we also have news coming in wherein Zara India's FY23 sales have jumped up by as much as 40%. What's working in its favor? Clearly, it looks like a lot of us are shopping at Zara because that seems to be working out for the company. And we also have Winnie, who's been shopping there as well. Winnie, apart from the fact that you've been adding to the sales, what are the other internals you can tell us?
Absolutely, we surely are adding to the sales, but 40% increase is a very good number that has come in from Zara sales. And let's not forget, Zara India is primarily a JV that Trent has with this company, and that is Inditex Trent Retail. So yes, that company Zara sales numbers that have come in. And now in terms of the numbers that we see coming in for FY23, the total sales stood at 2,562 crores versus last year in FY22 it was just 1,800 crores, approximately 1,824 crores. So sharp jump in terms of the sales. Other than that, even the profits of the company have seen a healthy growth coming in as well. Profits up by 77% as well on a year-on-year basis. So overall, that shopping trend which we were worried, maybe people are not buying. A lot of companies are facing a slump in terms of, the sales of apparels. That is not there. And furthermore, obviously, calibrated increase in terms of the stores that company is focusing on. Currently, Zara has around 20 stores in 11 cities. They will be focusing more on stores as well, focusing on high quality retail spaces as well. So obviously, they will be looking to make it more attractive. And obviously, the India market, when you look at the Indian apparel market, that is also growing at a good rate. Aspirational buyers are there. The income in terms of the lower end people is increasing as well. So that could something be higher disposable income, broadening the base of the pyramid, and that could lead to further increase coming in for Zara in terms of sales as well. Other than that, obviously, we'll also keep an eye out on the market that is growing. The apparel market is growing at around 15 times CAGR as well. So 15-20 times CAGR, interesting time that we could see further more growth coming in for Zara going forward.
Okay, Vinny, we'll leave it at that and continue contributing to the sales. 18,400 on the Nifty, but let's just pick up Trent and see what the stock price is up to. It's a significant jump that Zara India has seen in its PAT and revenues. Trent currently holding up 1.5% higher, 1,500 plus levels on Trent right now. Mayuresh Joshi as well joins in on the show. Mayuresh, I don't know how closely you've been tracking Trent, but it's never been a doubt about how much sales they can clock. It's always been about how expensive the stock is. But clearly, this is one company wherein the revenue and PAT growth seems to be defying, the valuations of the stock price. Still a buy for you at 1,500?
Afternoon, Aisha. So on the O'Neill lens, the momentum continues because it's on the it's above the pivot levels that we closely track. Again, as Vinny was mentioning, Zara's numbers have been very, very good. But I think the more critical component in terms of contribution comes in from West Side. That's almost 70% of revenues for Trent. And it's one of the most pragmatic business models that you can probably think of. The private labels probably extend itself in terms of both the margin performance that West Side individually contributes to the overall Trent margins. And the same sales growth have been in double digits, 10-11%. So the large expectation in terms of gross margins expected to be reasonable around that 48-49% mark. EBITDA margins between that 15 to 17% kind of a band, which basically mean that the compounding that probably happens on the bottom line as discretionary spending holds up. Because apart from West Side, I think Zudio, which is a the brand that they probably house, a lower ticket brand, has significant amount of sales growth as well. Add to that, Zara contributes to their JV as well. So yeah, I think second half should see significant amount of discretionary spending coming back as the festivities come through. And therefore, I think the momentum of this stock can very well continue.
Okay, so that's a take coming in on Trent and Zara, but I'm also intrigued to hear your views about Midcap IT. Look at a Zensar Tech today. After that solid 12% rise in the week gone by, today again it's up around 12%. And even the numbers from other Midcap IT companies have been quite strong. What are your top favorites here, Mayuresh?
Afternoon, Anisha. So, I think mid-cap IT companies have reported a very stable and a robust set of numbers. I think the large expectations after large-cap IT companies started reporting, and when Infosys probably gave that howler, is that mid-cap IT companies might also miss their mark. But I think across the spectrum, mid-cap IT companies have done exceptionally well. You take into account the R&D companies, KPITs, and the Tata LXIs of the world. We probably look at LNT, LLTI, Mindtree, Zensar. You look at a very small company called Datamatics. I think none of these companies have probably disappointed at this juncture. So yes, I think the arguments that probably go in favor that even if the order book starts shrinking, mid-cap IT companies typically get order books between $1 million and $5 million in terms of a ticket, and therefore I think those orders can very well continue in spite of an impending slowdown. BFSI, which is obviously a big contributor for the sector as a whole, can see some imminent headwinds and manufacturing out of the European zone as well. So I think the first quarter numbers are going to be very, very interesting this fiscal around on what is the reported number in terms of both constant currency revenue growth as well as the order intake. But so far, I think mid-cap IT has not disappointed. I'll probably wait for pullbacks, Anisha, to answer your question. A few of these stocks in late-stage basis as per the Union methodology, and therefore waiting on pullbacks for a stock like a KBIT or even something like an LTI Mindtree, persistent for that example as well. So both these or three of these counters, maybe pullbacks is something that I'll probably look at because valuations will also become a tad bit more reasonable.
That was about the read-through coming in for the IT sector earnings, but earnings are expected from Airtel as well. What should we expect? Somit is joining us with all those expectations.
Well, if you see in the fourth quarter is expected to be a muted set of numbers from Airtel. The revenue and EBITDA on a consolidated basis are expected to rise around 2.5%. EBITDA margin is expected to come in at close to 51.4%, which is largely flat on a sequential basis. But the key number to watch out here is the India mobile business performance, and that segment's revenue is expected to be just 1.5%, which is the slowest growth in the last 10 quarters. And this is because of an absence of a broad-based tariff hike in the fourth quarter of FY23. Now the ARPU number that is expected to come in at 196 as against 193 that the company had reported in the previous quarter. Now whatever growth we are seeing in the ARPU number is largely because of the increase in the minimum recharge plans that the company had taken. But this increase in minimum recharge plan was taken on a staggered basis all over India, and that's the reason the benefit of this hike is just 3 rupees in the fourth quarter. The full benefit of this would be realized in the first quarter of FY24. Now the subscriber base is expected to marginally increase, but there is some set of analysts who are also expecting that the subscriber base might decline also because of the hike in the minimum recharge plans that the company had taken. Apart from the India mobile business, the DTH business is expected to report a weak set of numbers on a sequential basis, while the broadband and the enterprise business revenue traction is expected to be robust on a sequential basis. Now apart from the numbers, the key thing to watch out for from Bharti Airtel numbers would be the 5G subscriber numbers, if at all the company discloses them. Along with this, their commentary on the timing of the tariff hike would be important to watch out for. Along with this, what is the kind of trends that they're seeing for 5G subscriber base, their capital expenditure and their growth plans going forward would be important to track from Bharti Airtel earnings.
Thanks, Somit, for that. But the market seems to be making a bit of a U-turn. The Nifty has slipped below the mark of 18,400. The Bank Nifty had turned already. So a bit of a weakness. Naresh, what do you make of the weakness that we are seeing across the board? Bank Nifty, Nifty, IT, all of those sectors are reversing their course today.
So a little bit of jitters should ideally happen around the previous all-time highs. So Bank Nifty around 44,150 is the previous high. We've pulled back a bit from those levels. For the near term, I would expect 43,700, 43,800 zone to act as a support. So a little bit of jitters is normal. And also the fact that the largest weight in banking space, HDFC Bank, has not made a move. So makes it a little more difficult for that breakout to play so quickly. But overall, this has been the trend for the market. It continues to do slowly and steadily. We've gone from 16,800 to 17,400, 17,800, now 18,400. In a similar manner, we've taken pauses in between. So this is just another pause as what the view is right now.
Right, okay, slip below that 18,400 mark just by about 10 odd points. And it's really this same suspects, it's real estate which is really taking the charge. This PFC as well, by the way, holding up 4% right now. Sun TV has been shining bright, about a 4% uptick there as well. So media in general is looking like a smart space. Of course, the two most actively traded ones, that's Z, that's also holding up 2.5% right now. And then there's Sun TV, which is up about almost 4% as we speak. Metals too have made a comeback. Telecom, Somit just highlighted what to expect from Bharti's performance. So there's Tata Com, Bharti, Indus Tower, Idea, all of them are looking very charged up and strong today. And autos as well is not really a bad set. So Tata Motors, of course, is seeing a strong earnings reaction, but some of the other auto stocks as well are looking strong. So MRF, which managed to hit that 1 lakh per share mark just as of last week. There's Bosch looking very strong. Hero Motocorp has shot up to that 3% gain mark. Tata Motors looking very strong indeed. 2.25% higher for Ashok Leyland as well. And then Motherson as well is looking very, very smart indeed. Mayuresh, if you had to buy afresh within auto anchs or autos, what would you pick?
So Aisha, I think tire stocks are looking very interesting. You just mentioned MRF, and most tire companies have reported a very stable set of numbers. Margin expansion was very, very robust because input cost deflation had played out in terms of the P&L, and it's still expected to play out quite meaningfully for the better part of this financial year. Natural rubber prices are significantly down, expecting it to hover between 155, 160 rupees per kilogram. Synthetic rubber prices, NTCF prices are all down because crude derivatives are expected to be lower. Having said that, the expectation in terms of volume growth, both from the OEMs and where stable demand is expected to continue, both from a volume and a pricing perspective for the replacement market, that should probably hold up the fortune for these players as well. So within the pack, obviously, I think MRF has done exceptionally well, but it's a large ticket item. I think Apollo Tyres looks very, very interesting. Numbers with margins at 16% were very, very robust. Even if they normalize to a certain extent in the next few quarters, a large part of the capex is largely behind them. The management believes, Redstein and the European operations, another 10 or 12 million tires can probably go through in the European market in the aftermath of the Russia-Ukraine crisis and the ban on Russian imports as well. And that creates a significant addition for its European operations. And even within the domestic scene, MHCV, PV market are expected to hold up pretty well. So I think in the auto anchor space, as you specifically asked, I think tires look very, very interesting. Apollo Tyre within that looks very, very interesting.
Okay, in the meantime, let's spot some of the other names as well. Zensar Tech, as we were talking about, is now up a good 14%, and Safari Industries too has seen an up move of around 6%. So a lot of these buzzers. But on the losing side, it's Ethos, which is down 10% today. It wasn't a very bad performance coming in from the company. Of course, the margin has dipped quite a bit, but the management explained to us that is on account of the foreign currency movement as well. Having said that, they are expecting a growth of almost 12 to 15% on an SSSG basis over the medium term. And in fact, in FY24, they are looking to clock a revenue growth of 25 to 30%. Listen in to what the management had to tell us earlier.
23 was actually 30%. So that was a very welcome and a very great figure. Our long-term target for same-store growth is between 12 and 15%. That is what we believe same stores can grow and will grow for us. However, our overall target sales growth, which would be same store as well as new stores, over a long term, as I've mentioned in the past, we have been aiming, or we will continue to aim at 20 to 25%. In FY24, we actually hope to be able to do much better, and we expect to see overall sales growth between 25 and 30% in this year.
In fact, Mayuresh, this entire luxury segment is something that we have been talking about. We just spoke about Trent, Zara. Now you have Ethos, which reported a decent set of numbers, though the valuation is definitely expensive. And then you also have names like Landmark Cars, maybe a Vedant Fashions, etc. as well. Any topics?
So I think all of them have moved significantly, Anish, and you're absolutely right. I think we'll have to wait for pullbacks. Even the case of Ethos, as the management was just speaking to your channel, I think the move before the results, I think they're almost 45-50% kind of a move. It's very interesting because the luxury market, if you look at the watches segment, specifically the premium and the super premium segment, the expectations of the market size moving from 6,800 odd crores to almost 12,500 odd crores over the next few years seems to be plausible. And within this, I think the premium and the super premium segments, through the offerings in terms of EBOs and specialist stores, is obviously going to expand quite significantly. I think Ethos becomes a huge component in terms of the entire ecosystem there. But valuations, as you said, are exorbitantly high at this point of time. The move already was gestated in before the numbers. So I think we'll wait for significant pullbacks on this one as well. And even the premium end of the car market, you have a look in terms of the sales that the premium end car makers are probably reporting in the Indian context itself. And that number is expected to grow exponentially as disposable and discretionary spending keeps on going higher, specifically in the urban and the semi-urban side as well. So yes, I think some pockets of the market expected to do well, but would expect, again, pullbacks because I think it's a little bit overheated at this point.
Right. Okay, let's get in some ideas as well going before we wind down for the day. Kunal, the Nifty Bank was unable to hit an all-time high, maybe just in a day or two, but any trades that you recommend executing?
I think missed by 10 paise. I think not even 10 points for the banking index. Anyways, the two buy calls which I would suggest, one would be Ashok Leyland from the auto pack. I think that's a stock which is confirming a breakout, and this comes after months for Ashok Leyland because the stock had been a huge underperformer. So I think with the entire auto sector doing well, Ashok Leyland could also get into a breakout mode. Targets of 166, so expecting a 10% up move from current levels, stop loss 147. And the second would be a bond DLF, more of an extension of what I discussed over the last 1 week. 460 was my earlier targets for DLF, revising it hard to 490. So traders could look at a fresh buy even at current levels, and stop loss could be kept at 459.
Right. Naresh, what about your BTST trades?
So first would be a buy on Yale India, giving a short-term flag breakout, stop loss at 109 and a target price of 116. Second is a buy on L&T, which has pulled back a little bit over the last two sessions. Looks like a bounce back trade from here. Stop loss at 22.38 and a target price of 2300.
Okay, so that's the top bet coming in. L&T saw a bit of a sluggish performance after its earnings as well. In fact, the entire capital goods space, the numbers have been quite solid apart from L&T, and the street was baking a lot in for L&T. What's your take, Mayuresh? Is L&T a still good buy, or maybe you should look at the likes of ABB, Siemens, Thermax, Cummins and the likes?
No, absolutely. I think most of these players have given a fabulous set of numbers. So I think whether you take into account ABB, Siemens, Cummins, they were on our buys a few weeks back, but the moves have been quite significant in these counters. To that context and contrast, L&T probably disappointed in terms of the margin profile. But the management sounds very, very hopeful in terms of their objectives from an FY26 perspective. The three objectives that they've probably laid out, one in terms of the ROE targeting of 18% over the next 3 to 4 years, with expectations of 14% to be hit in the next year itself. So they're almost around 12.2, 12.4% at the end of 23. So I think 14% will be a huge jump in terms of the operational capabilities for L&T itself. The second element in terms of getting the working capital requirements down quite significantly will mean that cash flow improvements on the balance sheet and ROICs and ROEs, both of them improving in that tandem as well. And the third and the most important aspect in terms of the order book that they've probably got, with input costs now coming off quite significantly, my own expectation is that L&T's numbers should sequentially look and appear far better. Obviously, I think you're talking about general elections in the first quarter of next year, and therefore a lot of pre-ordering will also start coming through in the next 2 to 3 quarters. So the hope is still around that L&T should continue doing well on operational efficiencies, but the other firms have done well. So yeah, I think L&T should do well in the next couple of years.
Okay, that's the take coming in on L&T. In the meantime, closing in the day with, fortunately, a print above 18,400, at least on the futures. 18,413 is where we're currently at in trade. 79 points higher as we speak right now. Of course, it's a tough fight between Hero Motocorp and Tata Motors. While it was Tata Motors which began the day with that gap up after its numbers, but Hero Motocorp is the one which is charging ahead right now. Naresh, stack up the charts for a Hero Motocorp and a Tata Motors. Not an apple-to-apple comparison, but you know it seems to be a tough fight for the top there.
So Tata Motors in the short term has done really well. Hero Motocorp is interesting for the fact that the returns for the last almost, you could say, 15 years to 10 years has been terrible. The stock used to be 2,200 back in 2009 to 2010, and today we are still struggling to be at 2,700. So over the last 1 year also, every time it has come to 2,750 to 2,800. 2850 band, it has pulled back. So if it can break out of these zones over the next few weeks or months, that would imply a major trend change for the stock, which could be very similar to what happened with Hero Motocorp or a TVS Motor. So watching out Hero Motocorp more closely, because that is where the upside could be relatively higher if it plays out.
Right, okay. Right. Mayur, just let's have some buy calls from you as well, stocks that we've not spoken about.
So NBFCs, Ayush, as a space look very, very interesting in our opinion. In most logical terms, I think the rate hikes largely behind us, which means that the rate curve should probably start tapering off. So I think the NIM compression would be a little bit obvious in the first half of this financial year, but I think it should start flattening out and making a case in terms of more stability there. In terms of the retailization in terms of L&T Finance, more specifically on the NBFCs that we're looking at, and Sundaram Finance, obviously Chola also remains one of our top picks, but for L&T Finance in general in particular, retailization has hit 75%, wholesale drawdowns of 11,500 crores in Q4 is a significant amount. The expectations of OPEX staying below 4%, credit cost staying below 3%, GNP is below 3%, and net NP is below 1%. Will mean ROA expansion to 2.8 to 3% as per their targets, which is easily achievable in the next few quarters and years. And therefore, I think the kind of valuations that it is trading at this juncture and the expectations in terms of significant growth with tier 1 capital at 22% will mean that earnings growth should outbeat expectations and estimates, at least over the next few quarters. So I think NBFCs as a space look very, very interesting at this juncture. L&T Finance, Chola, Sundaram Finance look very, very promising.
Right, okay. Let's begin winding up the day then. Mayuresh, good to have you on the show as always. Kunal, Naresh, we let you go as well. 18,400, just about managed to miss that life high on the Nifty Bank, unfortunately. But it is real estate, media and banks, which did take the fall today. So the Nifty Bank is closing in with a 0.6% gain. 44,064, 271 points higher there for the Nifty Bank. Let's look at the constituents though. Amidst the large caps, it was largely an Innocent Bank, a Kotak Bank, SBI, but they were all under 1% gains. Reliance, ICICI Bank, they've closed in flat for themselves. And amidst the larger end of the market, you know, a TCS, for instance, has been a rank underperformer today. Cipla has gone down 2% lower. Maruti was down about 0.7. And the Adani group of stocks didn't participate in today's move at all. The Adani Enterprises goes home with a 3% cut for itself. Having said that, realty shone bright. So DLF, Oberoi Realty, Godrej Properties, these were all stocks which were looking smart. ITC clocked up nicely, about almost 2% in trade. Unilever, Infosys, L&T and Bharti ahead of its numbers have managed to see gains for themselves. But that's pretty much it on this edition of Closing Trades. We'll wind it up right here and see you with all the market action tomorrow morning at 8 a.m.